Let's take a look at the local market space, which is about to close in the next minute or two. I'm joined by Brian Pyle, Portfolio Manager at Old Mutual Equities. Good to have you with us today, Brian. Maybe before we take a look at the market close, let's pick up on one of the big news stories out so far today. That's SAB Miller out with their quarterly update. I was speaking to an international analyst a while ago, and he mentioned that, hey, Africa's still booming because clearly South Africans like their beer.
Yeah, it was an interesting update. The market opened quite weak off the back of the updates because I think the volume growth in lager sales of -1% disappointed the market. But on the way here, I saw that the market had actually taken SAB positive. So they're probably seeing and looking through things like Australia and the US that was a little bit weak. China was also a bit weak, and into the African markets where, you know, on a 10 to 15 year view, you're going to see continued growth. I think the other positive coming out of that was the non-lager volumes, so the cool drink and soft drink volumes, which was up 10%. And, you know, that certainly is a very good result. And prospects for things like China are also very good, despite the fact that it wasn't a great update during that half. So all in all, I think it was slightly poor, but, you know, in line to maybe slightly lower than the market was expecting.
Brian, we'll continue with this in the analysis of SAB as well as other companies in a moment or two. But let's cross to Tumisho Greater now. She's at our headquarters to unpack the market performance for us and tell us which stocks were in the green. Tumi?
Well, thanks, Gugu. It's 5 o'clock. The South African markets are closed. We have finished in positive territory. Let's take a look at some of those standout stocks on the top 40. Resources, definitely the outperformers there. Anglo Platinum up 3.5%. Looking at ARM up 3.2%, and ASOR 5.6% after today's trading session. Exxaro also in the green by 3%. BHP Billiton not to be left behind, also in positive territory. But it hasn't just been a resources story. The financials are also quite strong today. We're seeing that with the likes of Discovery as well as First Rand. They're up there by more than 1% each. Looking at some of the opposite end of the spectrum, rather, we've got Into Properties down 0.63%, Growth Point 0.5% weaker. Kumba Iron Ore, we definitely should be talking about this specific stock, extending those gains that we saw yesterday up very strongly today. Looking at Nedbank, 0.75% firmer, Naspers 1.6% after today's trading session. But do remember that earlier on today we did have a trading update coming out from SAB Miller, and we have been talking about that specific stock. How has it closed today? Well, 0.24% firmer after today's trading session. But let me break this down for you on a sector basis so you have a clear indication of where the support is coming from today. 47,686 points. Looking at the specific, looking at the different sectors now, resources definitely strong, financials as well, 0.85%. The commodities, how are we faring so far? We have been talking about Brent crude earlier on today. We were sitting at $88 a barrel. Now we are down to 86. Again, what are the OPEC nations going to do at that meeting in late November? Copper sitting flat, platinum 0.5% firmer, and gold pulling back by 0.2%. The local unit 11 Rand 062. The good is where we are after today's trading session. Gugu, that is the closing markets picture. It's back to you at the JSE.
Thanks so much for that update there, Tumisho. Still speaking to Brian Pyle. He's a portfolio manager at Old Mutual Equities. I want to pick your brain on the acquisition activity that we've always heard being mentioned around SAB. If it's not Heineken, it's AB InBev. Do you think the quarterly update that we've seen maybe creates a different view of the pursuers and the pursued with regard to SAB Miller?
Our view on that potential deal with ABI is that at these sort of prices, it starts to make sense, but any higher than 570 Rand a share, I'm talking in Rands, so that's the easiest way to talk about the SAB share price, it just doesn't make sense for ABI to pursue it at those sort of levels. It just, there's not enough that they can extract from it. So if the share price is trading below 570, I think there's a chance that it may happen. But, you know, we saw it trading up to 670, 680 in the last month off the back of speculation that a deal was going to happen. I don't think it makes much sense for ABI in the 600s to do that sort of a deal.
All in all, if you were a shareholder in SAB, is it still a good one to have in your portfolio, Brian?
On a longer term view, yes, I'd happily hold SAB. I think you're going to get good emerging market growth. I think the developed markets or organic, original businesses are going to continue giving you a reasonably low single-digit earnings growth. But I wouldn't be holding it in the hope that you're going to get a deal and that you're going to get a quick turnaround or a quick profit out of it. But with a 10, 15-year view on a share like that, sure, I definitely hold it. It gives you a nice rand hedge and probably high single digits developed market currency growth. So no reason not to hold it, but I wouldn't be holding it just because of the deal.
Let's move on to a smaller one, a Consolidated Infrastructure Group, which came out with a trading update late yesterday, expecting headline earnings per share to increase by as much as 35%. It does seem to be managing to perform quite well despite the tough environment that it's in.
Yeah, it's got two main revenue sources. It does electrification, so we need to think in terms of substations and renewable energy projects, so wind farms, that sort of thing. In South Africa and up into Africa, and that space has been good. They're growing there very well. And then they've got a big business in Angola, which is involved in rehabilitating the waste that comes off oil rigs. And that business has been doing well. So the trading update was good. I think it was more or less in line with what people who follow Conco were thinking it would do. But one must caution not to jump to conclusions just off the back of one number. It is a case of a business that has got more work than they could carry out. So they can pick and choose what business they want to do. And because of that, one has to follow the balance sheet quite carefully. So are they managing to collect their debtors, making sure that their stock, etc., is not blowing out too much as they grow further and further. So it's a case of just making sure the company is not growing itself bust. But I really don't think that's the case, and I think it was a good result update, but I'm just cautioning that you would want to see the rest of the income statement, balance sheet, cash flow before jumping to conclusions. But they're good at what they do, and they've got a good management team who are implementing well. So yeah, all good so far.
A company that is experiencing challenges, though, is Dawn, the logistics group there, out with a drop in their headline earnings per share, down by 24%, maintaining the dividend despite the share price falling so far today.
Yeah, it's a very disappointing set of results. The first half was good, and then the second half has been very bad. It's noisy because they've sold some businesses, so you've got discontinued operations in there. But if you strip through the clutter, I think they've been hurt by two main things. The first is the strikes, and we're going to see a lot of companies that are reporting numbers now that have been hurt by the strike action. And the second thing for them has just been the slow and low building activity growth. A lot of the building and construction companies in South Africa, the Group 5s, the Murray & Roberts, the Avengers, are very blurred by non-South African business. So a lot of them have got big Australian subsidiaries, so you don't really see what's going on in South Africa as such. But Dawn was one of those that's at the sharp end of what's going on in the South African building market. And certainly we're seeing a slowdown that's not good. So those earnings, I think, once you strip out to get to what's really happening, we're about 25% down. And they're cautioning that they're not seeing a lot of improvement in the first half that they're already trading in now. So I think that business can earn somewhere around about 70 to 75 cents a share on a normalized basis, but it's going to be 2 years' time, so the June 2016 numbers, before we really see that. So I think people are going to sit around and wait and maybe trade it at the fringes for now. But yeah, it's unfortunate because the first half was looking good, but the second half wasn't good.